back to Inside the Markets by Globe. I'm your host Sunlight, and today I'm welcoming back to the show Christopher Newhouse. So watch on to find out about what he's building after a year at GSR, his thoughts on market drivers and trends, and much more. So enjoy the video. So welcome back to the show, Christopher. How are you?
I'm good. How are you?
I'm great, thank you. So it's been around 4 months now since you were last on the show. Could you catch us up on what you've been doing?
Yeah. So last time I was on the show, I think 4 to 6 months ago. I think it came out 4 months ago, but we recorded it maybe back in December, early January, right? So that was right after FTX had happened, but it was also before any of the crazy exciting run up back in January. I'd say also covering some more details. Silicon Valley Bank happened. So all the bank issues and things that happened February, March timeframe. USDC had depegged. BlackRock has filed for the spot ETF. And then very recently, over this past week, we had one of the largest liquidations since FTX, and also maybe since summer of 2022, from what I've seen. Kind of going off the back of those large liquidations, I want to discuss kind of really quickly what I think that was caused by, because I saw so many different things popping up on the news, on the media. A lot of people were saying it was SpaceX taking Bitcoin off the balance sheet and selling it off. But to be honest, to me, I'm all about discussing the dog wagging the tail or the tail wagging the dog when it comes to spot driven moves or derivatives markets. But this seemed like a very clear case of someone getting liquidated in the derivatives markets first, due to like some adverse market making positioning and things like that. I think the liquidation there, it was actually the second largest in Deribit's history, according to Gravity Sucks on Twitter. Traders are kind of speculating that a market maker, a large position holder on Deribit, was impacted by liquidations. They're forced to sell futures on Deribit Exchange. But it is all kind of supported by the fact that at one point, I think the futures difference between Deribit and some of the other exchanges was as much as 2,000 per Bitcoin. So someone basically came in, had forced sold on Deribit or got liquidated. And I think that caused a lot of the moves. Just because I think there's so much going on right now in the kind of crypto specific environment, BlackRock filing for the spot ETF, things along those lines. I think that news has been the predominant narrative for trading Bitcoin for the past 6 to 8 weeks. And I don't think just seeing some retroactive article about SpaceX taking Bitcoin off the balance sheet was enough to shift sentiment to cause such a massive move. That's one of the biggest things I wanted to highlight over the past week.
Yeah, amazing. And also, so with the Deribit thing, were you able to trace which account got liquidated at all?
I wasn't able to trace who got liquidated, but I was able to know that someone must have gotten liquidated. Like the way that the price action happened in the market, this was over like a quick 15 minute candle on TradingView. This was a massive like account just getting blown out. It wasn't like, a 2-day TWAP that hit like a little bit of a snag and then had a small liquidation and then another liquidation happened and then another. It was basically like one massive like giant liquidation kind of happened and pushed the markets into a massive period of volatility. I think there's a metric that I use by Volmex called BVIV and EVIV, and this is kind of tracking the overall implied volatilities of the options contracts. And right after that massive move, there's like a 60% spike in Bitcoin implied volatility across the curve. So it was definitely a noticeable event by both market makers as well as those who've been waiting for that, one event to happen, because a lot of the market trading action recently has been very range bound over the past like 6 to 8 weeks. So a lot of people were holding on to these long options positions, just paying theta per day, just sitting there bleeding, waiting for a move to happen. And if you're holding, short dated puts here, you made out like a bandit and you made a ton of money. That was one of the interesting trades that was popping up. And then also, I think since then, a couple of conferences happened. So ETH Denver had happened, and then Consensus happened. A lot of focus was on the regulatory environment, like happening during March and April. I noticed that builders are still building in the bear market, and that's kind of what kicked off to starting Infiniti Labs.
Yeah, awesome. So actually, to speak more on the regulation right now, could you give us somewhat of a forecast of where you think it's heading globally?
Yeah, I don't want to make too much speculation here, but it seems pretty bullish in terms of what's been going on the regulatory front in the US. And that's something that I'd like to highlight, because previously it seems like a lot of policy and regulation has been led abroad. A lot of the Monetary Authority of Singapore, the MiCA Act in Europe, everyone except the US seems bullish on crypto regulation. And I think that they understand that, hey, this is an opportunity to be a first mover on regulatory policy and take some of this US talent, some of the US developers, and bring them over to Europe or Dubai or Singapore and things like that. I think that only very recently has the US really started to recognize, hey, we can't lose these jobs. We can't lose the developers. We can't lose this financial talent here in the US. We still need to continue to be an innovative hub for blockchain, crypto, large language models, AI, all that. And recently, some strides have been made in terms of the Ripple case. So it ruled in favor of Ripple not being a security. Or there's a lot of fine line print. You know, if it was an OTC trade with an institution, it was a security, which is fine. But if it was traded on exchange, it was not a security, which is a great ruling for a lot of the altcoins. And I'm pretty sure like the next couple of days after that news that came out, this is always very crypto specific, is crypto markets and altcoins always move based on narratives. And the Ripple narrative was one of the biggest ones that had been holding altcoins back for such a long time, especially given the regulatory scrutiny of a lot of different entities in the US. And after that decision had come out, there's definitely a lot of market moving news in the altcoins for a couple of days, and then they kind of faded, and then people just started to get bored of altcoins again. And now it's a lot of focus on Bitcoin and ETH still.
Mm-hmm. Awesome. So, last time you were here, you were at GSR, and well, now you're not. So, could you talk a bit about Infiniti Labs? What your core values are?
Yeah. So Infiniti Labs were a DeFi, or it's kind of a blockchain and crypto as a whole, but with my background and the co-founders' backgrounds, we have a strong presence in DeFi and strong understanding of DeFi primitives, market making deals and agreements, product market fit, go-to-market strategy, things along those lines. My co-founders right now are still in stealth. And a lot of the things that we're working on right now are building out a few more internal resources as well as helping build our external brand. So our main goal is to focus on helping advise those who are just still here in the bear market, still building. In terms of our backgrounds, we have a strong background in both traditional finance on their end, and all three of us have the experience in the crypto space specifically. So for me, you know, I was previously a trader at GSR, previously at Genesis Trading. I'm a DeFi mentor for Outlier Ventures. I wrote for Paradigm Trading. I wrote for Deribit. Just heavily had my hands involved in everything crypto, especially on the trading side. And now I'm able to leverage that and use that background to help support a couple of our clients that I can name. So I'm working with CoinCall Exchange, Vertex Protocol, and Panoptic Protocol. A little bit about them: CoinCall Exchange, derivatives exchange, aiming to be the Robinhood of crypto options. Vertex Protocol, it's a hybrid order book built in Arbitrum, really has it all. Integrated money market helps them be very, very capital efficient compared to a lot of the other decentralized exchanges. It's quick, backed by all the right trading firms. Panoptic, DeFi primitive. They're creating perpetual options through Uniswap 3 pools. Team over there, super smart, really great. Two co-founders are PhD professors, I believe, from Cornell and Princeton. They're imagining options in a very different way. So it's very interesting to kind of look through it through an academic perspective and approach it from the academics first, then going through finance. But the product they're building is really cool. So like I said, all three of these clients that I'm working with, they're all trading and DeFi focused.
Awesome. And sorry.
Oh yeah, and I guess sorry, and to discuss some of the core values. One of the biggest core values at Infiniti Labs is transparency, right? One of the most opaque parts of the ideation that projects have to go through is how to select a market maker. Everyone knows that they need one, but a lot of projects give up a large amount of their token supply to kind of lock these market makers in. And since most deals revolve around the token loan and optionality agreement, being able to pay back in kind or being able to exercise this kind of option like payout to return a dollar amount, it's very important that projects know exactly what they're getting into whenever they're signing on these longer term agreements with market makers. So we're one of the, and then I'd like to say that we're also one of the DeFi advisory businesses who also has a strong background in traditional finance, but also have very strong crypto native backgrounds as well. Everything, we cover everything from business development to trading to strategy, incentive design as well. Working at one of the market makers, one of the biggest things DeFi protocols are interested in are how can we entice market makers to actually bootstrap the initial liquidity on our platform, and kind of just looking at it from our perspective, we're able to help kind of guide incentives that might bring market makers on to be that first source of liquidity.
Awesome. Yeah. So could you actually explain to me? So obviously, ICOs are no longer a thing now. And So I think all the rage now are IEOs, no? So how would you, for example, like help a project launch their IEO with a market maker, let's say?
So it's mainly consulting on the terms of the agreement. A lot of the like them actually launching it and the process of going through that's actually usually going to be on the market maker's end. But in terms of the stuff that we help with, it's kind of looking over the contracts, looking over KPIs, things that market makers set, how many exchanges they're listed on, where a lot of the tokens are going. There's different things where a lot of people are just excited to be listed on different exchanges and they want to start getting the initial liquidity there, and they're pretty quick to jump the gun and just sign things without reading. But one of the biggest things that you should be noticing are, there's definitely reputable market makers in the space out there. And there are also not a lot of reputable ones in the space. So whenever you're working with market makers, it's great to be working with, the big brand names, but there are also like very specific KPIs that are set that should be met. And there's different things that you can kind of negotiate on. It's like, hey, can you list me on, can you help provide liquidity on, DeFi exchanges? Can you help provide liquidity on centralized exchanges? That's why I really enjoyed my time at GSR. I know they're one of probably the more reputable market makers in the space. They're very transparent on the KPIs that they have there, very transparent in how they do business. And that's kind of some of the core values I wanted to bring over to Infiniti Labs.
Yeah, awesome. So, I mean, since starting Infiniti Labs, has trading taken a bit of a backseat for you or no?
So not really at all, which is, very good because this is something that I'm very interested in, but I've always wanted to do trading. I will still be doing trading. So as you know, and as I was just describing, all three of these projects I'm working with are DeFi and trading related. So I have to be up to date with the markets. For CoinCall, I'm building out like an options academy and hosting several live sessions with them. So I really need to make sure I'm up to date on all the current events, what's going on in the options markets, what's going on in the spot markets, anything interesting going on in the perpetual futures markets, etc. I'm an avid user of, I'm an active user of Vertex protocol, and once Panoptic launches, I'll be a product user as well. So we're actually very fortunate that we can be selective with the projects we work with. It's a side, it's like a passion project for all of us, and we want to be able to support the next generation of builders who are coming out of this bear market. So not only are we helping advise and helping out with some of these projects and protocols, but we're going to be users of a lot of these projects that we want to take on. We don't really want to take on projects that don't really fit our core values or is something that we're just not going to use. Which is why I'm working with, some of the top protocols in the space right now, Panoptic and Vertex. They're both backed by Coinbase Ventures, or one of them is backed by Coinbase Ventures. Both of them are backed by Jane Street Trading. So they're backed by all the right people. The founders are great, very smart, and I really enjoy working with them, and also really enjoy using their product.
Yeah, awesome. So funny you mentioned actually Jane Street because so they've left the cryptosphere now, right? What are your thoughts on that?
Yeah. So that's something to do, I'd say, with the regulatory environment, because from what I've heard, a lot of these U.S. traditional market makers, they're pulling out of the U.S. just of all the regulatory scrutiny there on the exchanges. It makes sense, right? A lot of their core businesses, that's their bread and butter. They're making 90% plus of their revenue from traditional asset classes. Why risk having any crackdown from regulatory entities in the U.S. on their crypto business, which will impact their main business, when they're making 90 to 90%, a ton of their revenue is coming from traditional assets anyway. So they have more to lose than a lot of the crypto native companies as well. There's still some crypto native companies making markets on the US, but there are also some as well that are very proactive on the regulatory front that have kind of just pulled out from the US. So in terms of what that signals to me, it signals to me that if you are crypto native and you're still making markets and all these traditional players have pulled out, there's a lot more kind of edge and juice in the pie to be making these markets, especially here in the bear market. Like as liquidity pulls back, there will be opportunities for even just small retail makers to kind of come in, run bots, and still make some pretty profitable trades, just because the big, Jane Streets and Jumps aren't really trading against you on some of these venues anymore. So that's something that I definitely notice. And then that is also kind of more on the spot and perpetual, like spot and derivative side. I'd like to say that the options business in the US is already very weak or kind of pulling back in the US. I know a lot of the traditional firms who run crypto options teams, they don't do it from the US. They're moving their traders to the Bahamas. They're moving their traders to London. They're moving their traders to Dubai or Singapore. And that makes sense because there's not really a crypto options exchange in the US that's legal anyways, other than the CME, which has pretty, the liquidity on the CME is not as good as Deribit at all. There was definitely some discussion about the volumes and open interest on the CME increasing during the first and second quarters of the year. But then it kind of died out. The interest in it's whenever all the liquidity is on one venue, everyone wants to trade on that venue, and it's very difficult to bootstrap liquidity on the other venue unless there's some sort of massive incentive. And what that incentive was in the first and second quarter was the fear of centralized, or the fear of venues that were not in the US. Basically, it was the FTX had blown up, and people were like, "Oh my gosh, is Deribit going to be next? If the CME blows up, there's bigger problems than anything else, right?" So if the CME blows up, there's something going on. But that's why a lot of people were interested in trading in the CME in the first and second quarter, because they're like, okay, if the CME blows up, there's a bigger problem here. Let's go trade on the CME. This is probably the safest venue. But yeah.
Wow, awesome. Yeah, no, thank you for that. It was kind of like a positive outlook. Like, even though these huge traditional players are moving out of crypto, that means there's more opportunity for crypto natives, which wasn't a view that I've heard before, but very positive. Thanks.
Yeah.
Yeah.
And
So
I
I'm
think they'll. Oh, sorry. And then I think that I think these traditional firms, they'll come back once the regulatory environment is a little bit more positive in the U.S. as well, because a lot of the stuff that they're doing, it was like the spot exchange market making, some of the derivatives exchange market making. Some of these businesses, they pulled out of the U.S., but they're still active overseas on overseas venues, which is kind of a sign to me that, okay, once the U.S. kind of gets their stuff together in terms of a regulatory outlook, they can come back in the US and start making markets back in the US. Yeah. Sorry.
Yeah, awesome. You don't have a crystal ball, but like, do you have a timeline at all?
Yeah. So I guess a lot of it is going to be dependent on this BlackRock spot ETF filing, the BlackRock spot ETF filing. So in terms of like my views on the macro landscape right now, it's something I'm definitely focused on, right? The CPI, the FOMC minutes, inflation readouts, forecasts, things like that. But just being so specifically in the weeds of crypto right now, the massive overhang everyone's waiting for, and the thing that's been driving price over the past couple of months, ETF spot filing by BlackRock. And the thing that's going to impact the prices are most likely going to be any subsequent delays or any approvals that come out of the spot ETF filing. Timeline, I actually think it's like the next 60 to 240 days. I know that's a very broad range, but I'm like 90% sure that online there's some sort of deadline that has to be met before a decision can come out and things like that. So I'm pretty sure on the wide end, I think they have like 6 months or something like that before they have to make a decision. But I think that that's going to be the main factor in the midterm. The Ripple case, it was great for altcoins on that one day. And there's also been a lot of token specific news going on with things like Friends Tech. I think that's the biggest thing popping up on Twitter now. And then Yield YGG, that was like a very token specific event, Curve protocol as well. So most of the pressing issues that are at the forefront of the minds of the crypto traders, I'd say, are going to mainly be if the spot ETF gets delayed. That would not be good. So we broke out of this trading range we've been trading in for so long, unfortunately to the downside. But that also means that a lot of market microstructure is starting to drive the markets again as well. So liquidations, dealer gamma positioning with respect to how it may impact underlying hedging, spot liquidity, and how that's pulled back based on what we were just discussing in terms of market makers pulling off exchanges, funding rates, etc. So I think over the next couple of months, there's always going to be this microstructure driven move that can happen, like just as we saw with some of the largest liquidations happening in the past, year. But there's also kind of this overhang of the ETF that we're waiting for as well. I think that crypto usually tends to trade on a lot of macro news as well, but I think that that's just taking a back seat compared to some of the spot ETF. As soon as that news came out, we went from, I think, 24, 26K all the way up to 30, and then kind of just sat there for a while. So I think that that's the biggest driver, and people are just waiting for a decision.
Yeah, awesome. Thank you. So right. So I guess the two big main things were, looking at the regulatory frameworks and also the spot ETF. So how are you preparing for the next what did you say, like 60 to 200 days?
Yeah. So over the next, that kind of time period from a trading perspective, it's very important to keep your head on a swivel and be very adaptive to the market environment because as we all know, like the market environments can change very quickly. I think back in, March, April timeframe, like the SEC was going after Coinbase for listing securities and all this stuff on their front page of their website. They went after like 10 or 15 different tokens. And I think literally 2 weeks or less later, BlackRock files for the spot ETF. In crypto, things move so fast. So you have to be very, very adaptive to the market environment there with things like how to approach a range bound trading market and things like that. There can be sharp moves, but there's also a lot of mean reversion. So being able to act quickly and take advantage of a move, and then being aware that you may have to completely change your direction or your trading thesis, that'll definitely give you an advantage. So as we approach like a year out as well, we start getting closer and closer to the 2024 election, and I think that that's also going to have a massive impact on the underlying markets, but in turn as the crypto markets as well. And then I think in 2024 we also get to see the Bitcoin happening and the narratives that form around that as well.
Awesome. Yeah. So you have to be very quick. So do you use any bots at all to trade?
So for me, a lot of mine is very manual trading, but it's trying to quickly figure out what the next longer term narrative will be. So I'm not ever going to beat someone. Sometimes I do, but I'm not usually ever going to beat someone to they have an API that's pulling data off of Twitter or from the Fed. They immediately see a CPI printout, and within the next 5 seconds, they have a trade up already on Binance. It's more like whenever I saw the spot Bitcoin ETF filing start to happen, that same day I was getting into being long Bitcoin. So while people were thinking, what does this mean for the spot markets and what does this mean for the regulatory forecast in the next 6 months? For me, it was very obvious that this means big institutions are coming in, and whenever a heavily regulated entity like BlackRock is looking to file for a spot ETF, and they have an ETF record of, I don't know the numbers, but it's like 501 to 1 where they've only had one unsuccessful filing. That means to me that there's a lot more at play than just someone filing for a spot ETF. It means that they probably have a custody solution figured out. It probably means that they are lobbying regulators and have a little bit more information on the government side of the business as well, that something is going to be able to push in their direction. To me, that news coming out, I was immediately able to kind of process, okay, this is probably one of the bigger narratives for crypto over the next, 4 to 8 weeks. And then the price action is probably going to move positively. And then after that, it's going to depend on whether or not this thing actually gets filed or actually gets approved or actually gets delayed. So there are a lot of people who trade like the events very quickly. But for me, it's trying to understand what the next thesis is going to be before everyone else realizes that's even a thesis. So for me, a lot of my trading, it's manual, but in an example like that, as soon as I see that coming out within the next, 30 minutes to an hour, I'm thinking, okay, over the next month or two, this is probably going to be a predominant narrative that's pushing Bitcoin to the positive directions. I'm just going to go long Bitcoin here. So while everyone else is thinking, I'm trying to put on a trade and make sure that it's actually getting put on. Yeah.
Yeah, awesome. So you said, this might be big news within a month. How do you normally determine, how long you can trade on this news for? Is it like a case-to-case basis?
Yeah, no, that's a great question. It usually is a case basis, and it depends on. For me, it kind of depends on what market regime I think we're in. Are we in more of a mean reverting kind of market environment where we're quick to go back to a norm, or is this going to be like a momentum driven market where we can make new highs or make new lows? And you can decisively like look back at historical data in the markets recently and realize probably what we've been in. So over the past, I'd say like maybe 8 to 12 weeks, the past 3 months, we've been in this range bound trading environment where every move to the upside immediately follows back to some sort of mean reverting trend. But in the first quarter of 2023, back in January, whenever we started the lows of 17K, for the next 2 months, we ran all the way up to 30K. It was pretty much like up only with a couple of gaps down in the middle. So it's very clear that was more of a momentum driven market, and this range bound trading environment is a little bit more of a mean reverting environment. So in terms of the strategies like I'm putting on and trying to think about what the next news might be in a year, it's trying to think, is this news going to be enough to push us out of the range bound market that could move us into a more momentum driven trading strategy? Or is this news just going to push us up to that upper bound of the range, and then eventually we're going to sell back off and go back to the lower bound of the range? So like I was kind of saying, with what's been going on recently in the markets, I'd like to say that this is probably a little bit more of a mean reverting market right now. So a lot of the news, it's kind of hitting the highs of the market, coming back to kind of this baseline, and then just trading like kind of in a pattern there. Don't want to get too technical on the technical analysis there, but that's kind of how I perceive it. And then I think that the spot ETF filing, that was news as well. But I think any approval of that or any confirmation that's going to go through and all the things that I was discussing previously were to happen, I think that that could push us back into a momentum driven market where I could hop on a pattern and trade it for a month or longer.
Yeah, awesome. So, could you tell us a bit about your next steps with Infiniti? I know you're, juggling your masters and being a founder at the same time. So,
Yeah. So the next step for us is to kind of focus on building out some of our external brand on Twitter. So we've been very fortunate enough to have strong enough backgrounds to attract high quality projects without doing much outbound effort. Right. In my background alone, like I was saying, previously involved with Deribit, Paradigm Trading, mentor for Outlier Ventures DeFi cohort, which is great. It gets me a little bit more exposure to what's going on in the venture and founder side. I was a trader at GSR, involved in the market insights team at Genesis. I was a speaker at Cornell's blockchain conference in East Denver. So I was able to get a lot of high quality inbound requests from this. Or I had reached out to a few contacts that I had made from some of the conferences or some of my previous experience at these different kind of mentor and writing opportunities and get something kicked off. So I guess next steps for us are kind of building out more of that external brand. We want to have a Twitter with a bunch of followers and kind of just have that continuous inbound, because right now we've been fortunate enough to not have to do much on the outbound effort. So we're definitely open to talking to more high quality projects. And right now you can kind of reach me out on Twitter at crypto DeFi guy. And that's where I kind of discuss a lot of the project stuff as well right now.
yeah, awesome. So, it seems like right now Infiniti Labs is more sort of focused on B2B, like kind of institutional players. So I'm wondering, what is the significance of like a large Twitter following?
Yeah. So it's also based on kind of, it may be B2B, but a lot of it is also project focused. And in crypto, Twitter's king in crypto, especially for strategy, marketing, go to market. I mean, the most successful projects I've seen usually have some sort of verified customers or interaction with their protocol already, and a lot of that's just coming from Twitter. So actually, a couple of the one of the clients I'm working with, Coin Call Exchange, they've been very strong in building out their Twitter, or they've been wanting to build out their Twitter presence. And a lot of these projects, from what I've seen, they run these like ambassador programs, which is kind of bringing in these key opinion leaders from Twitter, and kind of having them discuss the project, actually integrate and play around with the project and things like that. So kind of building out that Twitter following for us in Infiniti Labs just gets us a little bit closer to the narrative, to the entire ethos of the cryptocurrency builder market. Usually, if you're a good project, you've got a decent Twitter following, and you got to be careful about the bots and stuff like that. But it would just be, it feels good to just be aligned with the ethos of the crypto markets. So building the Twitter following is great, and then I've actually been able to, like I was discussing, onboard some of these clients that we currently have from interacting with them on Twitter, which is pretty much just DMing them. And then you never know who you're talking to behind the scenes. It could be the founder, it could be the head of marketing or social media for the protocol or project. There's definitely ways where Twitter has helped me get exposure to people in that project that I wouldn't have known existed previously. Because a lot of these people, like, they're either anonymous or you don't know their LinkedIn. You can't really reach out to them. You don't know their emails, but you do know their Twitter. So you can send a DM to them really quick, and maybe they can get you in touch with the right people if you have the right value to add.
Yeah, amazing. Thank you. So, do you have any closing comments or advice?
Yeah. So for the builders, keep building. This is an environment in which the projects that are going to come out of this are most certainly going to be leaders in their niche. I've spoken with projects that are starting to run out of funding or had poor prioritization of spending in the bull markets. And now they're definitely starting to fill the bleed, and vice versa. I've met some protocols and projects that were very stringent with what they're spending in the bull markets, and now they have this massive amount of a massive war chest that they can kind of spend on a bunch of different services or hiring and things like that. And it's definitely played to their advantage. For the traders, I would say be quick to adapt. Don't get too attached to your positions. Based on the moves we saw last week, you can see that getting attached to this ever-present up only bullish type thought process is something that you need to be able to separate yourself from, no matter what kind of market environment that we're trading in. And for those still wanting to get into crypto, I'd say it's definitely tough at this time. So being knowledgeable about what's going on in the current events, being knowledgeable about crypto specific events, it's definitely going to help show the passion and interest whenever you're chatting with others in the space. So yeah, that's kind of my closing comments for every type of person trying to get into crypto or wanting to learn more.
Yeah, amazing. Thank you so much. Thank you so much, everyone, for watching. And thank you, Christopher, for your time. And if you enjoyed the content, don't forget to give us a like, comment, and subscribe. I'll see you next time. Bye.